The S&P 500 just held a critical threshold. What does history tell us comes next? First up, a significant development in the energy sector. Reliance Industries, India's industrial giant, is making a rare move by offering West Asian oil cargoes for sale. This is a notable shift from their usual role as a major importer, indicating a potential change in their refining strategy or a response to current market dynamics. This unusual offer matters because it could signal an oversupply in the Asian market or Reliance's strategic pivot towards optimizing its crude procurement and product sales. For investors, this could impact crude oil benchmarks and the margins of global refiners, suggesting a potential softening in demand or a rebalancing of supply chains. We'll need to watch how this affects regional pricing and other major oil players. Let's move to our second story, focusing on the precious metals market. Gold prices have steadied, holding above the $3,980 mark, as traders carefully assess the outlook for U.S. interest rates. This stability comes after recent job data has influenced expectations for the Federal Reserve's next moves. Gold's performance is intrinsically linked to interest rate expectations. Higher rates typically make non-yielding assets like gold less attractive, while lower rates or economic uncertainty tend to boost its appeal as a safe haven. This situation matters because the Fed's stance on rates will largely dictate gold's short to medium-term trajectory. Investors should closely monitor upcoming inflation reports and central bank communications for clues on rate policy, which will be crucial for gold's next big move. Now, let's turn our attention to the broader equity market. The S&P 500 recently wobbled, but managed to hold above its critical 50-day moving average, extending a streak that's now the longest since 2007, spanning 133 sessions. This technical threshold is significant because the 50-day moving average often acts as a key indicator of short-term trend strength and market sentiment. Maintaining this level suggests underlying resilience in the market, despite recent volatility. Historically, such extended streaks can precede periods of consolidation or increased volatility if the index eventually breaks below this support. This matters for investors as it highlights the market's current technical strength, but also the potential for a shift should this long-standing support finally be breached. Watching this indicator will be key for understanding near-term market direction. In summary, we've seen a rare strategic move in the global oil market by Reliance, gold prices finding equilibrium amidst interest rate speculation, and the S&P 500 demonstrating remarkable technical resilience. Investors should keep a close eye on global energy supply-demand dynamics, the Federal Reserve's evolving interest rate policy, and the S&P 500's to maintain its key technical support levels. These interconnected factors will undoubtedly shape market performance in the coming weeks. Drop your thoughts in the comments. And if you enjoyed the video, give it a thumbs up. Don't forget to subscribe and hit the bell icon. Thanks for watching. See you next time. This is not financial advice.